Data-driven insights for serious traders. As the closing bell approaches, momentum is analyzed, tomorrow's key price levels highlighted, and the setups that matter most broken down. This is Trading the Close with Verified Investing.
Hello, everybody. My name is Drew Dosick, and welcome to Trading the Close. Today, folks, we saw a nice gap up off the good news of a potential trade deal with China coming through this Thursday. So this week, the FOMC is also anticipated to cut 25 basis points for the market. So what is that going to do? Is that going to juice up a lot of investors? On the back of news last week, we had 3% inflation data. Usually that's when they're starting to implement and not cut rates, but actually increase rates to tame inflation. So we've got some jockeying going on. Will the FOMC, will they have the right decision? Will the Fed come out on top with this? We'll find out, especially later this week. But first, let's check out the market summary board where everything's sorted out today. We see the Dow Jones up 0.75%, NASDAQ up 1.76%, S&P 500 up 1.29%. Big push on these two indices. U.S. oil flat today, down 0.03%. Gold down 3.05%. Now trading again back under $4,000, folks. We'll take a look at that chart, see where support levels will lie. Then lastly, Bitcoin is up 0.26%. But you notice we've been testing $115,000 today. Bitcoin's had a nice surge. Crypto space altogether over the weekend did decent. All right, so let's jump into the S&P 500 heat map, see where all the big players are sorting out today. NVIDIA up 2.7%, Apple 2.34%, AVGOs 2.15%, GE 3.04%, Qualcomm up 11.25%. Guys, hang around to the end of the show. I'll have some amazing potential upside targets on Google, which today up 3.61%. And then Tesla leading the mega caps, as you see here, up 4.39%. Great move on that. Amazon up and Walmart down going into the holiday season, as that will kick off definitely some battles for sales next month. So let's jump into the S&P 500 on this chart with the SPY. You see here today, and let me remind folks, for anybody that hasn't watched before, we've been contained in an inclining parallel channel ever since the COVID lows, folks, all right? Even this April decline that we had this year tagged the bottom into this parallel channel, and now we find ourselves now piercing and going above the parallel channel. One of the easiest ways for this to be done is a gap and go, as you see here, because price, when it was fighting to get through on Friday, got rejected down here at the top of the parallel. Today, it said, forget it. We'll build a bridge right over this. Is almost in essence like this is a river. So it contained all the energy that it would have used to get through that river, this resistance, and just continued accelerating up on the charts. Now, where will this lead us? That's the big question. So today, we're confirming a break above this red candle, but we have not confirmed up above the top end of this parallel channel. Tomorrow's price action will be critical for price to remain above this parallel channel. You can see here in the last 10 minutes, or on the 10-minute chart, we've actually started pushing up towards the end of the day. That tells me we've actually got a pretty good shot at remaining above this parallel. We'll see if this is a little fake out, maybe some short covering from a lot of investors that anticipated price to come back down to the top of the parallel, and price just didn't do that today. We were very stagnant. You can see there wasn't a lot of volatility intraday, except for the last 30 minutes of the day where we just pushed higher on the chart. So again, this is just one candle so far that's closed above this parallel. We need to get confirmation, which would be a push higher above today's candle and a close above today's candle. If that happens tomorrow, then this parallel will become support at 678.88 cents. Otherwise, we could easily drift right back through this parallel, as this area is just a minor support right now at the current status where these candles are. Next up, the Qs. Now look at here, folks. I expanded out this large parallel channel. As you see here today, the theme will be parallels, folks. So get used to those as they give us a ton of info. As you can see here, this started all the way back in October of 2021, went down, connected, and tagged this bottom end, and then also went back up. Notice when it went up, it caught resistance at the 50% area of the parallel. That's one of the things that I have as a key trademark for making sure my parallels are correct. It needs to interact with the 50% area, that dotted line that goes on the parallel. It needs to react to it. So if price is coming from below, that area needs to be resistance. If price is coming from the top, that area should provide support. All right. So in this parallel, as we see, that's exactly what's happened. It was resistance, got rejected. Price came back up, was resistance again before it broke out, ultimately failed on this breakout, and it jockeyed around this area before establishing itself on top of this 50% area of the parallel. So that tells me this parallel is a good parallel, but where is it going to take us if this rally continues? Well, folks, it's going to take us all the way up here to $658.93, the top end of the parallel. Now, that would be if we hit it next week. If we meander sideways, as you can see here, this is a dynamic parallel where the price will change the longer time goes without hitting it. We could be going even higher. Now, one thing to note, just because we're in the top 50% of the parallel doesn't mean we go straight to the top and then come down. We could jockey around in this area, even come down and test this 50% area before hitting the top. But it's just curious to see, now we're so close to the top, we're starting to get these figures in clearer view. Interesting chart there on the Qs. Now the SMH tells me that the near-term rally could be actually ending a little bit sooner than I thought. Yes, the SMH today had a fantastic day, up 2.51%. But you see here, we're getting ever close to the top end of this parallel channel. And if you go back out on this parallel, the original area that this parallel channel started was back in August of 2024. And I've also got this inclining trend line still on the chart for a reason, because if we do get rejected up here at this $362.38 level on the SMH, the top end of this parallel, price is going to come back down here on the first test of support at $354.04. Notice on Friday, we closed above this trend line. Today, we confirmed above it, creating this trend line as support. So be sure to be following this very closely in the coming days as the semis lead the way, folks. So semis will dictate and typically do tell us where the rest of the markets will follow. So I'll be watching that closely. Next up, we've got the IWM. Now, notice the IWM on this chart. We have a doji candle here where price is struggling to get above, but Friday and today were actually great moves. Regardless of the selling that occurred today in the IWM, it still remained up 0.36%. And this consolidation in this area would bode well for the IWM to break above these recent pivots. If I go over to the weekly time frame, the topping tail is still intact, folks. This is a weekly topping tail with the top here 252.77. That's the line in the sand to watch for the IWM to start breaking to go higher. And if it does, as we go back to the daily chart, you can see here on this inclining trend line, that area will be resistance right around $258.39. Next up, Bitcoin. Guys, how amazing is this parallel channel, right? For anybody that hasn't watched this show, let me just give you a brief introduction. This Bitcoin parallel has been in place since the beginning of this year. Yes, we had some deviation points where we did drop in February, March, and April underneath the parallel area, but this parallel has given us boatloads of data points and insight to resistance, support, etc. So, all right, so let's jump in to see where we're at so I can explain a little bit more. You see today's price action. Where's the high? Right here at the 50% area of the parallel channel. Much as I've described on previous parallel channels, when price runs up into it, it should be resistance, just as displayed here on this chart. Price on Bitcoin has rallied nicely ever since Thursday of last week. You see 1, 2, 3, 4, 5 days up in a row and now piercing this resistance area. If you're a Bitcoin bull, you want to see consolidation here right around $114,000 to $116,000. And then that would give the momentum to break up into the top 50% of this parallel. Should this momentum falter up here and price get rejected and come back down, first level of support, albeit minor, is going to be $106,766. Followed by this declining trend line that already gave it a bounce. This would be another minor support since we've already tagged it now several times. This will be around $104,500. But where I think Bitcoin will find a near-term bottom is going to be under $100,000, right around $97,000. That would be a great spot to buy and start accumulating Bitcoin, because even if it goes lower, this $100,000 mark will be a critical psychological level where a lot of investors will be scooping up Bitcoin. Next up, we've got gold. Guys, notice this, and I called this last week too. Hope you guys did watch this. If you didn't, go back and watch last week's episodes. I've given you a lot of insight as to where I think gold is going to be going in the near term. Now, clearly, price breaking beneath this inclining trend line that we did catch support on Wednesday. Had a nice bounce up, but still this was all bearish consolidation. Now we're looking to close underneath this pivot low from Wednesday of last week. So that does open up probabilities and increase them for further downside. First, minor support at $3,918.52, followed by where I think the ultimate destination will be is down here on this top end of the parallel channel. If I scroll back out on that parallel channel, you can see it originates back here in October of 2023, extended all the way out to where we had this breakout attempt. And then usually what happens when price breaks out from a trend line, price likes to go back and test that trend line. In this case, the trend line is the top part of this parallel channel drawn right here on the chart for you that you can see with the support area, $3,754.41. Next up, silver. As I mentioned to you guys last week also, big red candle, sideways consolidation. That implies more downside for silver. Currently, 46.79 is trying its best to hold price right here. You can see we pierced decently today, got down near the low $46 range, but I think silver actually could be headed a little bit lower. Next support, 44.26. Be watching for consolidation in this area and a potential break higher and or break down, depending upon what's going on with the pattern at that time. I think this inclining trend line, as you see, coming back all the way back to 2023, that's a beautiful spot for anybody that's not involved in silver to potentially pick some up. This is a conservative zone. So you may want to go ahead and pick some up earlier, right around 44.26. If you're aggressive, pick some up right here, right at the 46.79, but make sure you got capital reserved for potential add level down here at $41.46. That's going to be the Goldilocks zone. Not sure if it quite gets there because we did have a heck of a rally up, pushing up tremendously on this chart of silver. Very well may only get to 44.26, but be mindful that price could eventually come down sub 42 bucks. Next up, U.S. oil. You see here, U.S. oil, been talking about this declining trend line nearly the entire duration of me trading the close. And this declining trend line still is paying its dues today as price, as you see from Friday and today, is starting to consolidate right here on this trend line. Now, this, for any investors that weren't aware last week, there were more sanctions placed on Russia, and that limited some of the global supply, at least to some of the bigger countries. And so for the rest of the global supply of oil, that oil all got interest, which increased the cost of oil, which what do we know happens when that occurs? Well, the price of goods then go up. So we had a 3% inflation reading recently. The Fed's are about to cut rates this week, and then oil prices are going up, which also implies higher costs for everything. Any goods that we get transported over, typically used with the power of oil to bring us our goods. So if oil's going up, the cost of goods are going to go up. If tariffs are going to increase the cost, that means the rest of the goods are going to go up in cost, and inflation could be one of those nasty numbers that the Fed has to deal with when they're considering cutting rates. So we'll see where oil takes us in the coming days. If we consolidate some more right here, we're breaking through and headed to this next trend line up here at $65.87. Next up, nat gas, as you see here, is jockeying around right here in this resistance 408 and support of 383. If you're bull on nat gas, you want to see price remain in this area, build momentum for a further move up on the charts, which that next level to tag is at $4.45. All right, so next up, we've got Qualcomm, and you can see here what an incredible daily chart candle is displayed here on Qualcomm. We got all the way up over $200 today at 205.95. This was on the back of news that Qualcomm secured a deal to provide AI accelerator chips to Saudi Arabia's human venture. And investors at the beginning of the day, goodness gracious, look at these 10-minute candles. Just ripped the price of Qualcomm straight up on the chart. And as you see here, retreated nicely under 200. Not only that, under $190 to close the day here at $187.71. very incredible move that we have here on Qualcomm. For the near term, let's see if this will be over. But guys, I want to show you something else on the charts, understanding how to draw parallels. As I said today, parallels are a theme of this show. So let's just go through this chart and dial one in to see where price action can go on Qualcomm. So I've already got somewhat of a template down here at the bottom of the screen with this yellow trend line. So all I did is I started a parallel drawing right down here at the bottom, connected it over to these other major pivot points, and I take this all the way up. And what do we get, folks? We come right through this range right about here. You can see here that the 50% area is respected nicely, also right here. So that tells me even with these minor pierces that have occurred on the screen, and you can see it even better on the weekly time frame, this is a great parallel channel. So it tells us that if Qualcomm continues this momentum, we could be coming all the way up here to $240.71. Now, one thing to note, we've got a weekly topping tail in place, so a lot of resistance will be right here. Plus, we only had 1 day now closing up inside this 50% area of the parallel channel. We're going to need more days, and we're going to need more confirming moves inside the top 50% for Qualcomm to get its mojo together and juice to hit all the way up here near $240. There will still be several levels of resistance to go, but with this huge accelerated move up and big sell, that tells me this likely isn't going to be happening anytime in the near future. If I was a Qualcomm bull, I'd be paying more attention to this 50% area of the parallel, right around $183 to $184, making sure price remains above that, as that will increase probabilities for further upside in the very near term on Qualcomm. Next up, Lumen Technologies also saw a nice push today. You see here that we did push higher because they are expanding their business to 10 million new locations. This was a nice increase and push on the charts. Plus, we've got earnings coming up this week on Thursday, folks. So this may be the push before earnings, and the earnings may be a big sell-off in that case. Because look how much we've moved up since August 1st. Since August 1st lows, we've moved up now 178%. That's a little too fast and too much too fast, right? In this chart. Now, granted, Lumen's been much higher in the past. If I flip back to the monthly chart, you can see we're trading way down here near the lows of the chart. However, this is at a very critical stage. This recent pivot high on November 11th is where price will really hit a brick wall. And if you're a bull on Lumen, you want to see price not only get through this 950 resistance level, you want to see it tag this level up here, this recent pivot high at $10.33, and then start forming consolidation, because then what you would have is a cup and handle pattern. Now, we're several steps ahead with thinking that way, but at least that's what's starting to develop on this chart. And if you have a cup and handle pattern, oh my gosh, Lumen is going to start taking off. You could be talking about $17 levels once and if it breaks this $10.33 range. Now, keep in mind, this is small cap stock. They can fluctuate up and down very quickly, but considering this rapid movement up, we're going to need some consolidation before we gain momentum to break and take the next leg higher, potentially up there to 17 bucks. Next up, Tesla. So we see here Tesla this last week or so has really been back and forth. We had a great day on Thursday, reversed half the gains on Friday, and then another follow-through great day today, running right into resistance here at 457.27. That doesn't change what's on the charts, folks. An inverse head and shoulders pattern with a potential target up here at $512.97. All this chop back and forth is building momentum for a potential move higher. The one asterisk I have here is this big red candle on October 2nd. The high there is $470.75. If you're a bull on Tesla, you need to watch this level. Watch this level, and if we beat it, that opens the door for a clean, free, fast move up to 512. So be watching that in the very near future. Lastly, we've got Google. Now, Google, guys, look at this massive move on Google today, up 3.6%. Great move on it. But also, let's just go ahead and draw some trend lines to figure out where price is likely going to be going. Because if I scroll back out here, you can see Google is just kind of going off the charts, right? it's easy to say that and easy to somewhat anticipate this going off the charts. So what I'm going to do here is I'm going to draw a parallel channel on the lower end. So this should tell us where price action could go if it starts to retreat just a tad. And you see here, this is all the way back down here with the huge breakout that Google's already had. We could be talking about a pullback down here to $230. Now, yes, Google all the way up here at 260. Would that be a steep decline? Potentially about 15%. But this current break that we have with Google, yes, it's a great momentum play, but it is near-term overbought, as you see on the screen. If we have any bit of correction in the S&P 500, say we gap up like we have, and then start selling off back into that parallel, that could bring the price on Google back down at least to this pivot low at 235 and potentially down here right around $230. All right, guys, that wraps up Trading the Close. Don't forget to like and subscribe. Also, please send this out to your friends so that they too can start learning technical analysis and spot key levels on charts that they can take trade setups on their own. Thank you guys so much for watching. I know I put a lot of effort into this, so it means a lot, all the comments I get from you guys. I take a lot of time reading those to try to make the show better and also add tickers that you guys are interested in. So let me know in the comments below what you want on the show later this week. I'll try to get to a few tickers. I know I got a lot to cover, but I'm happy to look over those for every one of you guys. Until then, you guys have a fantastic rest of the day, and I'll see you all on the charts. Take care.